Hello, everybody. Welcome back to another episode of The Market Close. It is Thursday, July 25th, 3:46 p.m. And folks, I have one question. And I know it's the question on your mind. It's the question on my mind. And hopefully over the next coming days, we get a definitive answer to this question, because I'm not sure if we have an answer to this question, although it feels like we have an answer to this question. And that question is, do we need to buy a trampoline? Because maybe, just maybe, we've bounced. We might have bounced. Now, I'm saying that in a very cautious way. I do not think we have definitive evidence at all that we bounced. But when I left at around 10:30 in the morning, markets were down, and they were down bad. Nvda was at 106. S&P was at 537. QQQ was at 460 or 458. Palantir was at 2564. And as we're about 15 minutes from the market close, we've got the S&P at 540, still down for the day, not down as much. We've got IWM at 220, up 1.43%. We've got Robinhood that went to $20.85 now at 21.31. We've got Palantir that bounced all the way to 27.20. Now it's at 26.60, but it came up from 25.64. And we've got the NASDAQ here at 460. So I don't know if we bounced. I am hesitant to say that this is a definitive bounce. Maybe it's a dead cat bounce. We're going to explore a lot of reasons for the bounce to the upside or the downside. But maybe we do need to buy a trampoline, because maybe we got to bounce. Now, before we get into the market, before we get into everything that we need to do, I hope you guys appreciate a little bit of the joke about the trampoline. You know what I'm talking about? Amit went to the gym and the market decided that was bullish. How do you know I went to the gym? Do you guys see the sweat on me already? I did go to the gym in between the shows. I got a box. I got a black box, which has historically been the reference for Palantir. Got a black box from my good friends at Palantir. I kind of know what's in the box, even though I didn't open the box because I wanted to do this live, but I'm pretty sure I know what's in the box. So we're going to open it live, unbox this, do this for about 5-7 minutes. I also got permission from the person who sent me this box to give away some stuff from the box and from stuff that they have as well. So we're going to do some giveaways on this Palantir black box opening. I know a lot of people on Twitter as well posted they got some stuff from Palantir. Again, you know, they launched the merch store. They're sending out a bunch of swag. So we're going to open this up live. All right, here we go. Black. I love that they sent a black box because their reference is a black box. So that's the coolest thing. All right, we got a letter. We'll open this up in a second. We have here we go, the signed Carpat from Palantir. I know a lot of people have been getting this sent out. I think 4 or 5 people got it sent out. This is really cool. This is really freaking cool. This one is one of those things I show my kids in the next like 30, 40 years. So we're going to be giving away one of these. I got permission to give away another signed Carpat. So stay tuned. We'll give that away. We have this thing right here, whatever this contraption is. Okay, there you go. I think this is like a business card holder. Like you can hold like your business cards in. I don't have a business card, but I need to get a business card. There you go. Look at that logo nicely on the wood. And then we've got the star of the show. This stuff I've been waiting for. This is really cool. And this is all going to be on the merch store soon. Uh-oh, baby. Uh-oh. We got the Palantir windbreaker. There you go. Look at that. Not bad. This is super cool. I can't wait till people start rocking this every day as it gets on the merch store. So there you go. We got the Palantir windbreaker. And then this one is really cool. This one is Palantir crew neck. This is dope. This is super, super dope. Shout out to Iliano. He's the person who sent this. You guys know Iliano by now. He's a friend of the channel, friend of the chat. He's the one that's started this entire Palantir merch movement. So he told me this is a 1 of 4. Apparently, that's why it has the third one lit up with the other 4. So this is a 1 of 4. This is cool. This is a really, really cool. I'm gonna wear this right now, and you see my hair is kind of crazy, and then we'll keep going. I love crew necks too, dude. We're getting into the weather, September, December, where it's crew neck weather and like hoodie weather, which is my favorite time of the year. Oh boy, here we go. Oh, this feels good too, dude. It is all made in the USA, not Chinese or anything like that. This is cool. This is nice. This is really nice. Oh boy. All right. It feels good. It actually feels like really good quality. You know, a lot of crew necks, they're made by like merch, like white label merch stores, and they suck, right? Because they just put your logo on it, but it's not good quality. This feels good. Yeah, smells like Carp's hair. Yes, exactly. Here we go. All right. Dope stuff. Dope stuff. Thank you, Ileano. Let me read the letter he sent as well. So he said, Amit, thank you for everything you do for the Palantir community. You represent the best. You represent the heartbeat and soul of this movement. I'm proud of your growth and fortunate to call you a friend. Keep crushing it and keep being yourself. I'll see you soon. Best, Ileano. All right. There we go. There we go. You know, it's been a long time for Palantir in terms of their journey as a company that's obviously started in 2003 and now it's, 2024. But the cool thing is the retail investor base is, and Carp has said this many times, has been the investor base that kept them afloat when the stock was $6. They're the ones who really cared. And so they are, reaching out to us and acknowledging us, which is really, really, really cool. Thank you, Ileano, for that. So now let's do the giveaway. He texted me that I could give away 2 things. So I'm going to be able to give away another Carp hat that's signed and another camo hat. So it'll be 2 questions. We're going to ask the chat. Whoever responds first will just DM me on Twitter and I'll get your address and give it to Ileano. 1 will be a signed Carp hat for Palantir, and then 1 will be just a regular Palantir camo hat. All right, here we go. So here are the questions. He texted me the questions, so these are his questions. Now, a couple of rules on this. The first question is hard. I doubt anyone's going to be able to answer it immediately, so you're going to have to use Google or YouTube to quickly figure it out. But the winner will be the first person that types it in the chat. If you type it in the chat, you will be the first person to win. And sometimes there is a delay between your YouTube and my StreamYard. And I'm really sorry about the delay. I really can't do anything about it. So you've just got to be the quickest you can be, because if multiple people type it in and I see someone before someone else, even if it shows up as you came in first, it might not show up on my end. And I just, I have to control it through my end. So this is the signed hat. This is for the signed hat. Okay. This is the question for the signed hat. Here we go. So this is for one of these. Whoever gets this first in the chat, it is a hard one. I don't think people are going to get it that quickly. You say the name, the exact name, you will get the signed hat. Here we go. All right. 3, 2, 1. Which U.S. senator appeared on Dr. Karp's panel at the 2023 RNDF conference? Which U.S. senator appeared on Dr. Karp's panel at the 2023 RNDF conference? RNDF 2023. If you know what RNDF is, then you would know this panel. Which U.S. senator? I don't see any answers yet. This is one that you can find relatively quickly. Full name, first and last. That makes it fair. First and last name. Oh, Jordan got it. Shout out to Jordan Lee, Johnny Ernst. You got it. Jordan Lee, you are the winner. I think you were the first before. Yep. I think you got it first. I believe you got it first. Jordan Lee, you have got it. All right, Jordan, text me your information in the in Twitter. DM me on Twitter. It's in the description. And DM me your address, and then boom, you got it. Jordan Lee. There you go. Johnny Ernst. It was a hard one, right? It wasn't as easy. We were thinking of doing what is Carp's favorite movie, but everyone would have got that so quickly because now you know if you watch the Sean podcast. So Jordan Lee, and I'm sorry if I didn't get you first. This is like how I'm seeing it on my screen. And so that's what we got, Jordan Lee. All right, Jordan Lee. So the second question is going to be, so you're going to need Ileano's Twitter for this. Ileano's Twitter. Okay, Ileano's Twitter. So I'm putting his Twitter in the chat. This is the hint. I'm putting his Twitter in the chat. Jordan, make sure you DM me. Ileano's Twitter is in the chat. Here we go. Question is for the camo hat. What is Ileano's favorite dog breed? And while you're there, you might as well follow Ileano because he's done such a good job setting up this entire community. So what is Ileano's favorite dog breed? I think someone got it. Did Benny get it? Benny got it. Benny, you got it. Pugs. There you go. We got it. Benny, you got it. Pugs. It is Pugs. So if you're on his Twitter, you might as well follow him on Twitter, but his favorite dog breed is Pugs. That's also Golden Retrievers and Pugs are my favorite. And I need to get Golden Retriever one day. Hopefully when I move out, I'm gonna get a dog. So Benny and Jordan Lee, and I'm sorry if you typed it first on YouTube, but it just didn't show up on StreamYard because it's just the way it is on StreamYard. I'm really sorry about that. It's just how the delay is. Jordan Lee, Benny, DM me on Twitter with your address, and we're gonna get you the signed hat and the camel hat. All right. There we go. We'll be doing much more giveaways in the future, guys. This merch store is going to launch, I think, in the next couple of weeks with a lot of more merch. So in the future, there's going to be plenty of more merch that's going to be coming out. And again, I'm sorry if you typed it in first and it didn't show up on StreamYard. It's just how StreamYard is, and you got to be super, super quick to get there. Okay, cool. There we go. So thank you to Iliano for the merch. Again, this is super awesome, and we'll be giving away a lot more in the future. Again, Palantir really showing that they give a fuck about the retail investor base, and they're reaching out and they're building this awesome community. Okay, markets. Let's get into the markets. We got a lot to talk about. Also, a good friend Jason's going to be on the show in about 20 minutes, and we're going to be breaking down technicals and seeing everything that we got going on. I'll also be live on Twitter Spaces from 6 to 8 p.m. 6 to 8 p.m. Is when I'll be live with a Stock Talk Weekly, who's another account on Twitter, and we're going to be talking about the markets as well. So every Thursday, we're doing a new show called Tech Talk, 6 to 8 p.m. If you're on Twitter, we'll be live right after the market close, and just keep going. All right, so let's get into it. We got 3 minutes until the market closes. Here we go. QQQ 458 down 1% on the day. Robinhood down 1%. Palantir 2663. Shopify is up a little bit. S&P is down. We're going to pull up Liz Young and kind of get her thoughts on what's going on in the market because I think she had some interesting things to say. I know we have the market close in just a couple minutes, but let's listen to what she has to say, and then we'll keep going from there and get deeper into everything else we've got going on. Here we go.
At this juncture, I think it would make markets believe that something else was wrong that we didn't know about yet. So I still think September is the first time that they cut. But I do think that we're going to start to hear more dovish language from them at the July meeting at Jackson Hole that will get us to a solid place of what our expectations are for September. I also think that commentary over a 50 basis point cut in September is going to continue heating up. That's still a contrarian view, but I think it continues to heat up. When you look at what's happened in the market, so I was on Closing Bell on July 9th, and I mentioned that forward PE ratios on the S&P were in the 89th percentile. We're still there, still high, okay? Not above 90, but still high. When you look at the spread between the equal weight S&P and the market cap weight S&P, the one-year return spread was 17% then. It's narrowed to 11%, but we're still in the 95th percentile. So what does that mean? It means the rotation is on slowly, right? But will it last? We've seen this story before. We've had a lot of head fakes with this before. This time, what is different is that we are approaching a cutting cycle. Typically, a cutting cycle is not this huge expansionary signal for the economy, and a yield curve that's uninverting, also not a bullish signal for the economy. So I think what we're going to see is that rotation right now that's happened into financials, into small caps. It can last a little bit longer, but as it conks out, I think we'll see a rotation more into dividend-paying stocks, utilities, staples. Energy, I think, will catch a bid again, and then healthcare.
So kind of,
Okay, so what did Liz Young say right there? Essentially, her argument is the same argument she made a couple of weeks ago, and that argument at its core was that, hey, we are transitioning from growth to value. Now, I have a lot of thoughts on that. 4 p.m., the market's closed. Let's look at how the market closed, and let's analyze her arguments and the opposite argument, which is that maybe this market has more room to run. 4 p.m., stock market is now closed. All right, the markets are closed officially. We have a lot to talk about. So I have a bunch of things I want to run through. First, let's go through some of these stocks, see how they ended, and then we'll get through the bear and the bull case. We've got Meet Kevin making some very interesting predictions as well, along with Tom Lee. So we'll talk about all that. Palantir bounces from 25.84 up to 26.64, up 0.15% on the day. The NASDAQ 458 down about 1%. S&P down about 0.53%. Again, these guys bounced higher. They were on the trampoline. They did the bounce up to the 545s, NASDAQ around 464s, but they've come back down as we end the day. So it's red 2 days in a row. It's not as red as it was yesterday, which is telling and also kind of not telling in some fashion, but they are indeed red. Reddit was down about 1.49% of the day. Hims actually ended green, 3.3%. Tesla, big winner today, up 2%. At one point, it was up 4%. Right now, ending 2% on the day. Amazon ending down 0.54% of the day. Google, some breaking news on Google. ChatGPT, or OpenAI, is launching their search engine called SearchGPT. That's why Google is down 3%. Google basically recovered the majority of the day. Then it fell at 2 p.m. when this news came out. I don't think ChatGPT's or OpenAI's SearchGPT is really that competitive with Google, quite frankly. I think there's too many of these search AI products like Perplexity, SearchGPT, all the stuff that's coming out with Bing. I think Google's still going to win, but the market did perceive that as more competition for Google, so they're down 3% on the day. SOFI, great day, 727 up 2.9% of the day. CrowdStrike, big loser today, down another 1.55%. KRE, regional banks, big winner, up 2.5%. Netflix, down about 0.3%. Arc Innovation, up about 1%. That's mainly due to Tesla. Semis did not do that well. SMCI, down about 2.24%. Nvidia was at 106. If you sold some puts at 106, there was a healthy premium. The question is it a dead cat bounce, which we'll talk about, or is the trampoline going to stay permanent and we're going to bounce higher? But Nvidia did bounce from 105 to 112. Microsoft as well, down about 2.45% of the day. Microsoft now $18 away from going below 400. And then Apple right here at 217, down about 0.48% on the day. All right, let's talk about a variety of issues that's going on in this market and break all of this stuff down. So first of all, here's the question I have for the chat. I'm actually going to do a poll on this because I'm actually very curious what people think. Dead cat bounce or no? That's the question. Dead cat bounce or not? What is a dead cat bounce? For those that don't know, it is basically a bounce, but the cat is dead. That is my elementary explanation. And so what that means is, hey, we're up today, but it's really eventually going to die again. And so the bounce is kind of giving you some exit liquidity, but we're really headed back down. And so we are not through with the pain that we're going to feel in the broader market. Let's explore that thesis right now in a couple different ways. So first of all, we've got Meet Kevin, who made some big moves. Meet Kevin is calling absolute bullshit on Tom Lee's argument around small caps. In fact, he called him the R word this morning, basically said, hey, this is absolutely insane to rotate into small caps. And Tom Lee's lost his brain into an upcoming recession. So he is totally against the small cap thesis. He put his money where his mouth is. He sold Amazon, Apple, Palantir, Nvidia, and Tesla, and he bought short QQQ, which is an ETF that goes short the NASDAQ, and then Biddy, which is short Bitcoin. It's a short Bitcoin ETF. So he believes the NASDAQ and Bitcoin are in some trouble in the upcoming future. He still believes Tesla goes down to 180. Tesla obviously had a green day. So far his Tesla 180 has not been correct. So that's what you got from Meet Kevin's perspective. Then on the Tom Lees of the world, they say, no. Even if the S&P consolidates, which is very possible. I mean, if we end August at like 5,400, I don't think that's crazy at all. But 5,400 does mean that maybe money starts rotating. If that money starts rotating, maybe it goes into small caps. As you can see right here, this is what Meet Kevin said today. He says rotating to small caps makes no sense as a recession comes further. And then Jesse says, actually, Meet Kevin is wrong because Tom Lee has been right on his predictions. And so far, the small caps are up 15% over the past 2 weeks. They've outperformed the S&P because money is indeed rotating. And Tom Lee retweeted that. So it's really a question of, do you believe in the broader effects of a recession that are coming up, and that the bounce that we're seeing right now in large caps makes zero sense that we saw today? And for the morning, it sounded like it was going to be a red day, and then it kind of had an intraday reversal. Or is the argument that the market's inevitably going to crash, and rotating to small caps not only is stupid, but keeping your money in the markets is stupid as well? So I came up with a couple of arguments on both sides, and I'm curious what people think in both ways in terms of how this plays out. We do have Decker's earnings. Let me pull that up real quick just to look at that. I think that's the main earnings we have today. Decker's got into the S&P 500 a couple months ago. Decker's, they're down 0.26%. I'll get their numbers as soon as they're out. But those are the main earnings today that are important after the bell. There's nothing else that's crazy. Today we have Decker's. Yeah, really it's Decker's. I mean, Texas Roadhouse is another one that'll be good for the consumer in the context of restaurants. But outside of that, those two are the big ones. Okay, so first of all, what's the poll? What's the poll saying? What's the poll? Yes, 55%. Okay, so 55 out of 236 people, 55% say dead cat bounce. 46% say no. So here are my thoughts on it. There are two elements to it. I broke it down on Twitter. Let's go through this. If you DCA'd yesterday, like me, I know a lot of people in the chat DCA'd, you are being rewarded on your DCA. However, if you went net new short yesterday, you were being crushed. Now, the end of the day kind of made that short a little bit better, but you're still getting crushed on that short. If you closed the short yesterday, awesome timing. I do know some people that closed their short yesterday and they made a ton of profits, and they didn't want to get too greedy. But if you went net new short, not been the best. I think there's 4 reasons for you to take profits if you get out of this market and you believe Meet Kevin and this is a time to go short. Number 1, you think it's a dead cat bounce. That's the first argument. Number 2, GDP growth at 2.8%. You think that's bad for inflation. We're growing too much and rate cuts won't solve sticky inflation. Believe it or not, there are some analysts out there saying that this GDP number that we got, which I thought was, really good and really important. If we didn't get this number, we probably would have seen another, negative 2-3% day. That is bad for inflation. Inflation becomes stickier. Therefore, rate cuts are actually not going to help. That's one argument. Number 3, you believe that even though the economy is growing, the underlying labor market is weakening so that rate cuts won't be a tailwind, meaning rate cuts won't be like something beneficiary. It'll be a reaction to an economy that is heading into a recession because the consumer is struggling, the labor market is struggling, and therefore rate cuts, which Tom Lee thinks is going to be like the main catalyst for this massive, momentous small cap rally, that's not going to happen. It goes without saying, if you invest in small caps in a recession, you're going to get crushed, right? Like a recession is not the time to invest in unprofitable companies. And then finally, and this is the main reason, you think that the increased CapEx spend is silly, aka Google spending $50 billion a year on CapEx, semis, IT servers, GPUs, etc. It'll result in 0 ROI or small ROI. Tesla FSD is years away. It's not real. AI is more than priced in. Therefore, there's no fundamental AI tailwind. I think those are the 4 reasons you have if you get out of this market and you decide you want to go short. You believe these 4 things are true, and you believe July 25th, 2024, market's starting to shift. Now, if you're staying in the market, I won't read through all 4. I'll just summarize them. Number 1, you believe the Fed is decreasing inflation while maintaining growth. We saw that with the GDP numbers today and CPI last week. Number 2, you believe AI is real. 12.5 FSD on Tesla is real. Tesla's going to be the biggest use case of AI in the real world, so there's no reason to sell. Number 3, you think the labor market is weakening, but people are still going on cruises. They're eating out at Chipotle. There's 7.9 million jobs. Therefore, the consumer is not weakening to such an extent that you would sell. And then 4th, you're obviously long generational companies like Palantir, like a Spotify that are using AI in their music recommendations or their deployment of LLMs in the enterprise, that it makes no sense to sell them at this stage of their growth cycle, because if you truly are, 5-10 years into the game, you believe that AI is going to be a tailwind for those companies and there's no reason to sell. So that's my question. What do people think based on those elements? Is that a reason to sell, or is that a reason to stay in? Meet Kevin obviously put his money where his mouth is. He's going short. Deckers is up 5%. So we got Deckers up 5% on earnings. We'll get those results in a second. But someone like Tom Lee thinks it's obvious to stay in the markets because the tailwinds of a rate cut and AI writ large are not going anywhere. IWMs end 1.23% on the day. I think that's the easiest way to break down the 4 bear cases, 4 bull cases on staying in or staying out. What am I going to do? I'm in. I think that this year ends really strong. I think even if we have choppiness and volatility in August and September before the election, I think after the election, we still have a decent rally. And I think it's premature to go short, but it's definitely premature to say I have $1 million to buy the dip, and yesterday and today was the day to buy the dip. So I'm kind of wishy-washy on both sides, but I don't think net end of the year we're ending out, S&P at 4,200 or 4,500 or anything like that. And this is the question that I think everyone has to ultimately answer. Texas Roadhouse, let's get to that. Texas Roadhouse, it'll be interesting to see if they pump and then fall, just like Chipotle, who had a good earnings yesterday, but the market was not able to give them any love. Chipotle also fell throughout the day. Texas Roadhouse is flat after hours. No movement there, but Deckers is up a little bit right now. Okay, the poll, what do we have in the poll? 53% say dead cat bounce. Interesting. So a lot of you feel this is not a dip to buy. A lot of you feel this is actually a little bit scarier to get in as the market goes down. When did Kevin go short? Today. I think he went short yesterday, but today he increased the short. Chris says, I'll stay in and continue to invest in great companies during local dips at discount prices. If the market drops hard 15%, then I'll go heavy and continue to focus on my highest conviction firms. Here's kind of my final argument on this. I think AI is going to be the sort of massive tailwind that makes this market relevant or not. And if you believe the CapEx expenditure is going to result in something real, meaning if you believe Tesla spending $10 billion on H100s matters because they're going to make $100 billion over the next decade on FSD, then obviously there is a moat towards AI spend, and there is a return that these companies that are not stupid companies, they're deploying. It's not the metaverse. It's not NFTs. It's something real. That doesn't mean there's not going to be choppiness. We had, I think, 3 to 7, 8% declines from 1994 to 2000 on the NASDAQ in between that bull run before the bubble collapsed. And if we're just starting into this, 4 to 5 year cycle, we're going to get some downturns, but that doesn't mean net going short potentially makes a ton of sense. And we're going to see how that plays out. Steve says earnings come out next year and beyond. How the hell are they expecting to see results from CapEx right away? I also agree. Now, that doesn't mean the market is wrong to sell off some of these companies if they don't see the earnings AI monetization immediately, but it does mean that it's a little bit irrational. Maybe you don't want to stick around in Google until they have AI monetization, but that doesn't mean other people's are wrong for buying Google before the AI monetization comes, because you just want to get in before you really think the growth starts coming out. So I think both ways it can be justified. I just don't know if going net short necessarily makes the most sense. Just like I don't think going net long entirely, if you're trying to DCA, makes sense as well. Jed says, always bet against retail. I say we go higher. Today was a nice green day. Good luck, everyone. Yeah, it'll be interesting to see as well if institutions will find out in the next 45 days, or I think next 30 days, how institutional holdings are kind of thinking of their stocks. I can definitely think retail, got antsy today seeing Nvidia at 106. If you have an $80 average, you probably took some profits because you were scared as hell that Nvidia was going below 100, and maybe some toots stepped in at 106 and, bought millions of shares because they thought Nvidia at 106 was an absolute bargain. And so we're going to have to see how this plays out over the next couple of weeks, but I think that is the general argument of how it ultimately plays out. Okay, let's get through 2 more earnings, and then we'll get into a ton of technical analysis with Jason and try to make sense of this market technically. So let's pull up the earnings right now. We have Deckers and Texas Roadhouse. That'll give us a little bit of an understanding on where the market is in the context of the consumer. So Deckers, people will be buying shoes. If they're buying shoes, that's a good sign. They just got into the S&P 500 last quarter, so that's important as well. For them to have a good quarter after getting into the S&P 500. And then you have Texas Roadhouse, which is a sign on how many people are eating out. I actually went to Texas Roadhouse a couple weeks ago as well. And I had steak that was medium well. Okay, here are the results. Here we go.
All right, Mike, thanks. We'll see you again in just a bit. Well, Hoka shoes are for running, and right now so are Deckers outdoor. Deckers outdoor shares. Yeah, Pippa Stevens has those numbers with the stock higher almost 5%.
Yeah, that's right, John. It is a top and bottom line beat for Deckers in Q1, EPS of $4.52. That was more than $1 ahead of estimates. Revenue at $825 million, also beating expectations. Now, both Hoka and UGG saw better than expected revenues, with gross margins also ahead of estimates. Year over year, direct-to-consumer revenue was up 24%. Now, in terms of guidance, the company reaffirmed its full-year revenue guidance, although the full-year EPS guidance was a little bit light of estimates, $29.75 to $30.65 versus Wall Street's estimate for $31.07. You see, though, there, stock up 4%. Morgan?
All right, Pippa Stevens, thank you. We've got more earnings to bring you, too. This time it's defense contractor L3Harris. Those results are out. And similarly to what we've seen to the other primes this week, it is a beat and a raise for L3Harris.
Raytheon was up 10% today. Lockheed Martin is doing well, so the defense contractors are doing very well right now.
Technologies EPS $3.24 per share. That was better than the $3.18 adjusted expected by the street. Revenue $5.3 billion. That represented a 13% increase, operating margin of 9%, adjusted segment operating margin of 15.6%. 2024 revenue guidance range increasing to 21 to 21.3 billion. Adjusted segment operating margin guidance also increasing, and non-GAAP EPS guidance for the full year also increasing to 12.85 to 13.15 per share. I'd also note book-to-bill of 1 times. In the report, Chris Kubasik, the CEO, talking about the fact that this is the 5th year anniversary.
Okay, so the defense contractors are indeed doing well. We've got Texas Roadhouse numbers as well. I've got those up right here, so let's take a look at that. And then we'll get into some TA. So Texas Roadhouse, we've got 9.3% increase on comparable restaurant sales year over year. Average weekly sales, 158,000, which is up from 146,000 a year ago. 6 new restaurants were opened, and 3 franchise restaurants were opened as well. Revenue was $1.3 billion, which is up 14.5% year over year. Net income is up, 46%, 120 million bucks this quarter. Texas Roadhouse stock right now is currently up 2%. Now that was, I think it was up like 25% going into the print. So I don't expect a massive move, but Texas Roadhouse continuing to crush it. They're up 2% right now. Revenue growth of 14% for a restaurant is not bad at all. Chipotle ended down 1.85% of the day, but they're up a little bit after hours as well. There you go. That's what we got. So Texas Roadhouse, Deckers, and L3 Harris were the main ones after the bell, and they seem to do well. L3 Harris, again, up 2.58% on the day. RTX Raytheon, this is up 8.24%. Defense contractors, that is bullish for Palantir, given they are a defense contractor, even if they're not a prime. And then you have Deckers, which was up 3.39% because they beat on the top and the bottom line as well. Okay, here we go. Let's make sense of this market, not just from a fundamental perspective, but also from a technical perspective. Jason.
Oh, what's going on, man? I was just checking out the one that you missed. Did you see Dexcom just now?
Wait, no, you're not muted. My volume was off. Sorry, you're good.
Am I muted?
You're good. You're good. Yeah, you're good.
Am I good? Can you hear me?
Yep, you're good. You're good.
Can we have a moment of silence for the Bulls, though? Just a little.
Oh my goodness.
I mean, it was a fun ride. It was good while it lasted. But I think we saw something coming like this. But that's okay. It's all good. Dude, this stuff happens, right? I think I wouldn't honestly look. I'm kind of this mindset. If you didn't take profits or hedge a little bit, I think you're kind of late, quite frankly, to be fair, to do that. I mean, now at this point, the VIX is really high. I'm thinking more around like, where's my shopping list kind of situation. We still have the bulk of earnings coming next week, right? So we still have the big dogs. Unfortunately, Google doesn't do it. Google's always a funky one, right? Like it's a like boring conference call always, unless their old CFO, the old CFO for Google is funny. Like she used to say the stupidest things sometimes, and the stock would just fall off a cliff. But I don't think the market really understands Google sometimes, especially for the ad component. So that can get a little bit overdone. But I think Amazon, I think we know like the two major winners in the enterprise, probably gonna be Amazon and Microsoft to me, but we'll see how those expectations actually look when we actually get to earnings season. But I couldn't tell you how many questions I got yesterday. It was like, can somebody explain to me why the market's really selling off, and really just aside from technicals, the technicals could have told you that. But we just came in hot, right? We came in hot to today's GDP and more importantly, tomorrow's PCE. And I think that, whatever happened today could reverse tomorrow. That's true, right? So if something comes in that's ideally tomorrow's PCE is just like inline expectations and, nothing really unexpected happens. But I think mostly, look, we just came in hot. We priced in all the rate cuts through September, and we're getting a little aggressive on that. And Tesla, Google earnings not like blowouts, and I think people just got kind of scared right now. Plus, we're at the end of the seasonal strength, so I mean, it's just typical.
So real quick before we get into the TA, are you net bullish or bearish after the past 2 days? Of what we saw?
I'm net bullish, small caps, and I am. I'm net bearish still, large cap, Mag 7. Quite frankly, with a couple caveats, right? I think I have to see is certain things happen. I have to see from a technical perspective, I have to see certain levels, if you will, like reclaim and hold. And I just it looked good. 460 was my low level on the Qs, which 465 was my primary target. 460 was kind of like stretch. We're below 460 here now. So at this point, unless the Qs are over 466, I really can't think that we're going up. And when I say over, I don't mean like for a minute or for like 30 minutes or an hour. I mean like an entire day open and close, maybe a couple days opening and closing above there. Because until that happens, there's still a lot of downside. And what we're and it feels really bad, but at the end of the day, quite frankly, we've just like reversed maybe 2 months. Right? That's it. At the end of the day, we were here 2 months ago, and the whole March rally on low volume, like that was sustained. And then when this volume starts to come back, actually, I don't know if you have the average volume, if it's been trending up or down.
This is cute. Yeah, so let's start with, we'll go to Tesla right after, guys, because I know everyone's curious about Tesla, but let's start with the NASDAQ. This is tech. Where do you see this going over the next month in the August?
So we are this is like Volmageddon, if you didn't know, right? Like this is where volatility like really cranks up. Obviously the VIX is like cranking up towards 20s right now, but it gets really choppy at the end of the day. So let's do this. If I took like all this stuff off from my main primary technicals, I use my major economic data point every month is something called non-farm payrolls, and that's the first Friday of every month. We get that, right? And that kind of gives the market the view on like where the jobs are, and like that's, you kind of read that into how much money the consumer is going to have or companies are going to have, et cetera. And that kind of prices in the market wherever we happen to be. So when I used this, and the thing with me was like, this was 495. And I mean, most people probably weren't thinking, oh, we're going to fail at 495. But this day I was like, no, we're not going higher. This is it. I think I posted that thing. This is the day. From here on, the market's going to use your Mag 7 as their personal ATMs. And it kind of just what happens. But the reason that is, and if I took like extended hours off for just a minute, this is that like NFP high. And this is how important these levels are. So like this is July non-farm payroll day high. This is one session. Let me get to the daily. This whole day is that NFP day. And this day, I think wherever it was, we actually ended up opening below and closing below. And you could see it just on a 30-minute. So we opened below that 496 and closed below that 496. So when I say
that was a sign, that was a sign for this was going to come.
That was a sign that we're no longer going higher. I'm not saying like it's at that point, it's like you're just not going higher. This trend of this giant like non-farm payroll moment, this is so what the non-farm payroll days do for me is they define the prevailing trend for that month, for the entire month. As long as we're over that Friday's high, then I'm thinking upside. If I'm inside that range of that day, because this is a single day, if I'm inside this, at that point, I'm no longer thinking upside, but I am thinking we're going to sit in this channel or in this box, and we're at least going to go to the bottom of the box and then possibly play that range. But if we're outside of the lows, then I'm just thinking short. And that's honestly, it's as simple as that. Those are really the only major lines I have on my chart, but this is where that puts us, right? So below 490, I was like, my only level is like 465. And that's why I posted like, see you at 465. And that's from another non-farm payroll day. And the low of that day when the market got that data is 460. So that's 460, 465. That's where that range is coming from. That was the first Friday of June when we got that non-farm payroll data. So if we can't get back over at least 466, which is the high of that day here, if we're over here, then I think that we go back to 490. I don't think that 480 becomes a stop. I don't think that's a thing. I think we go straight to 490. But if we're below that 460, I have to go from a technical analysis perspective. What I try not to do, and this is where people get in trouble, is they try to go out and be like, oh, here's the ultimate target. And I can't tell you, hey, like SPY is going to 500 as the ultimate target. Like, yeah, it's in the cards, but as a technical person and as a trader, you can't go that far out. That's how you get in trouble. You just go level to level. And so like spot to spot, if this, then that. So right now, if below 460.50, then 448. That's where we go, 448.
So the bounce today, from a technical perspective, I know we got the GDP data, and I know we ended still red.
You'll love this. It's going to be
why did we bounce in the morning?
So here are these same levels, right? So here's that day, right here. This is that non-farm payroll day. Let me see if I can make this screen a little bit bigger for you.
And then guys, we'll do Tesla after this, and then we'll keep going.
So here's that first non-farm payroll day. I take it from when the market gets the data to the high of that day, right? It's right here. And so if I bring this forward, and we're very oversold, look at where the pre-market landed, right in here. And if I drop this down to a smaller time frame, it's like we have this liquidity grab, and boom, we go straight up. But the level is like, okay, this is the target. And today, here's where I wouldn't push a short here. Net new, this is what I'm saying, it's kind of hard. Today we had an open above 460, but a close below 460. So to me, to have this confirm a further downside move, I have to have an open below 460 and a close below 460. And that takes me, and at that point, if that happens, I will say I am 99% positive we go to 448.72.
Wait,
like,
so you're saying tomorrow we have to open below 460?
Yeah, and close. We can we can open below it, but if we don't close below it, that deal's off.
Okay.
If that makes sense.
Yeah.
And I would probably swing a trade short, like meaning like I'd buy it at the close and actually take that trade.
But someone deciding, hey, it's time to go short this market, like at, QQQ to 430, 420. You don't think you have enough data technically yet to support that decision?
Well, I mean, so QQQ what?
420, 430-ish?
Oh, no. So I could, right? But how you get there. So this is the difference, right? If I took all these, so I'm going to take all these drawings and things off just for a second. And if I just took those basic simple moving averages, I can tell you this is what they're looking at. They're looking at this 200-day simple moving average right here, and that's 426. And is that in the cards? Yeah, it is. But remember, I'm a trader. So my job, what's my job? My job is not to capture the entire move in its entirety. That's how I can get in trouble. If I went out there and decided, oh, it's an ugly day today, and I bought 420 puts for whatever, December, right? Like, that's kind of a crapshoot, right? What happens if it bounces like crazy? What happens if we get good PCE and we go back up to 490, right? Instantly. I'm like, I put myself in a position to have a bias, like a heavy bias directionally. And I want to be able to stay nimble, if that makes sense. And as a trader, again, my job is like, I'm just going to take this little piece of the pie. I can tell you 420 is support, 430s, 425 is supported from a technical perspective. Just the statistics, like if you lose the 50-day here, the odds of going to a 20-day simple moving average are pretty high, right? And I think that's what they're looking at. And at that point, your 20-day might be around that 420, and it's gonna. So if I click this, these slides are gonna come back up, and it's gonna come back into here. But I'll use. You'll see those are the lines, right? It's gonna be 422.78 for me. It's not even gonna be the exact 200-day simple moving average. It's gonna be 422.78 to the penny. And that's going to come from basically February's non-farm payroll day. And that's how it's going to be. And I'm going to have Confluence is going to fill this, what we call fair value. But I'm not going to get there. How we get there, I think, is more important, right? Like if we get there. And I'm not until we're like, look, I'm not even thinking that far now. The only hedge I did take was on SPY.
Yeah, let's answer this super chat. Alan, thank you for this. Paper Gains is the best. I agree. What is SPY's next support level?
We're on it. We're on it literally so here's SPY. And I think this is really important. SPY is significantly stronger than Qs. We know. Just to be clear, the weakness is coming from those Mag 7 components. And I think there's a little read through across the board on some of those smaller, like picks and shovel names that aren't actually doing as good as people thought. They're out there, right? You have to kind of dig around, but we're here. So this is 536.90 is my support for SPY. This is that June NFP, and people think this is weird, but I'll tell you right now, man, this is the best market hack that you'll ever find is this non-farm payroll stuff. But see how Qs, we're below it, right? We're below that June NFP level, right? So SPY, we're over it. So SPY is definitely stronger. Look at Bob Bucker. This is basically it, right? But if we lose that 536.90, again, level to level, that range becomes in here for that next little piece of the pie that I need to take. And it's not until we get below that 531 that I really think 520 is in the cards, and it would be 520.
And the catalyst for that to happen fundamentally is bad earnings, PCE. What do you think is the catalyst to go?
I think, you know, in my response to people that were asking me what was going on, I think it's just like look, we've come off some serious gains, right? I was looking at Google the other day, and our group is like, they laugh about this, but I posted something. I was like, look, if you're in Google,
your camera shut off, by the way, Jason. Just letting you know.
Oh,
you're
sorry.
Too hot for the
I was like, if you're on Google, in Google, and you're looking at this, I'm like, everybody's long Google at low 90s, right? You're essentially a double at 190 from 90. You're still at double, and you look around, you see market weakness, and you have now at this point, you have a little bit worse, like not as good as expected, high expectations, let's say, from an earnings perspective. And you're here. Do you sell? Do you take profit? Have you already taken profit? Are you looking to get in? Or at what point as an investor, what point do you get in? Do you wait for 140, which is like 50% of where we just came from, right? Or from the lows? Like, is that where you buy back in, or do you just wait, right? So it's like, I think that is a lot of where we are. And you could just look like these are big runs. So I think there's a lot of profits in the market. And you know, expectations are high. I track the Dow 30 components from an earnings perspective, and the quarter before last, I'll tell you, was the best quarter I've ever recorded from an earnings perspective. The best.
It got frothy. That's the argument. It got a little frothy.
I mean, so I think it got frothy. People like to buy the market at a discount. There's not a lot of discounts there. When we say like things are priced to perfection, that's tough, right? Like, do you like you might say, hey, look, Google should be at 200, but if it was at 190, it's like, okay, do you really think that it's going to push it up to 200? Like, just because that's what it should be at, but people aren't going to be buying it. Well, where it's you need that next story, if that makes sense. And I'm not like super bearish on Google by any means. I don't own Google either though. So if that makes sense.
Okay. Let's get into Tesla, because I know everyone's curious.
Yeah. So we were looking at Tesla too in my group, and I'm a little. I like Tesla. Don't get me wrong. Are you going
to give me a meet Kevin and give me some bearishness, or are you showing me some?
No. Well, okay. So I'm going to be cautiously optimistic on Tesla, right? So from this 190, well, I had 188, and we knew for sure 190 it was going to break, and we were going to go to the upside. And where did we say it was going to go to the upside? It was probably going to be somewhere in here. We hit like 260 almost to the penny, and then we've pulled back. We had a couple issues with the robotaxi event being pushed out. That loses a lot of momentum. So we lost that momentum. And then earnings, it wasn't like I didn't think the earnings was going to push you over the top by any means. Like, if anything, earnings was going to present like a pullback situation. That said, I would have loved to see it hold a lot better than what it actually did. So I need to, for some reason, I'm having a hard time getting some of my lines on. I know okay, here. So this is that prevailing downtrend. And again, let me take some of this down, because this gets there's a lot of lines. I don't like to set all that stuff. It gets confusing trying to see everything through here. So here's where we are. So this is a weekly scale chart. This is that prevailing downtrend right here. Where we are on the daily scale is we've actually we've gotten to a point where we're now back into that downtrend line. So that's the concern, number one. A lot of times when you see these kind of downtrends and you get this break, it might pop up a little bit and fail just to come back down. That's what you should be concerned about as a Tesla investor. That's not what I think will happen. Again, because the whole story on why Tesla went up in the first place, that's still very valid, right? So my thesis on the underlying stock has not changed whatsoever. It's just the momentum to me, right? So from my perspective right now, it is just the momentum. Here's what we do from a trading perspective is that this is from that breakout. So this is 188, that breakout right here. Let me just see so you guys can see it. So it's this breakout.
That was when
This
he
little
got
green line.
that's when he got paid and all that stuff.
Can you see it?
Yeah, yeah.
Okay. And sorry if you guys are on YouTube, it might not come up. But from this breakout to this level, we have those two kind of retracements. So 230 is that half gap. And this is, I think this is that downtrend retest that we were talking about earlier. Which one is this? Yeah, so it retested this, broke out. I think we're coming in for possibly a bigger retest. Why does this not look right? I must have something different. No, maybe we're on. Are we on the downtrend?
I mean, so I want to know why Meet Kevin thinks it's going to 180, and why he thinks
Why
that's
he
generous.
thinks it 180?
He thinks 180, and he's saying that's generous for Tesla. And
I mean, he's
saying
going
from
to
a
have a
technical
fundamental view,
perspective,
right? Like, because he doesn't believe in FSD, right? Like, why? What it, Elon
No,
said?
I think he believes in everything. He just believes that it's going to be bad over the next few months. At least that's his latest thought.
Look, if it gets back to 180, that's basically right back where we were. I think you like. I mean, do you want to hedge? So here's what I'd say, right? Is that where we are right now? I think 215 is your line in the sand. We can look back here, and this is just on a little bit larger time frame. I'm going to do the same thing that we've done like multiple times over. I'm going to try and pull this a little bit deeper, but essentially this area right here. So from here to here, see this? So this is like a little bit of a wick. That's the 230 level that we're talking about. But this box here comes down to right in here to that's 206. But it's in this area where there was prior buyers down here, and then the sellers, and where we kind of started to flip. Also in here, we can see this area acting like positively here. So this becomes that area of like, where do we look for this to bounce? So here we are. One more time, once again, right? So this level is super important. To the downside, this actually takes us to, I mean, I hate to say it, it's like 206. But I don't want to see it go any lower than that. 215 on my end. And I think some of our guys might have measured from here. Oh, why is this? This is lining up right now to 204.90. You know what? That's what this is lining up to be on. If we're below 210 right now, I think that's clear. Right here, we're not going higher. I think this bounce is cautionary. But if this larger downtrend, so this is that downtrend. I think I might have had this guy set up. Oh yeah. So I'm just connecting these highs, and I'm just not like no influence. This is just connecting these highs, these lower highs. That was a broken downtrend. And this looks like we're still in a proper retest. Look at that, Amit. You see that? That's crazy.
But so you're saying 215-ish. If we can't hold that, then we have 206. After 206, then it's whatever happens.
Yeah, then it's no fun, right? But for this breakout to be had, like this is still, look, if you want like aggressive dip buys, it's around that, just barely as close to 210 as you can, if that makes sense.
Is 220 a dip from 270 or no?
Yeah. I mean, it's your thesis, right? Like what's your logic on the trade? I haven't sold a single share of Tesla at all.
Yeah.
Options, yeah, I closed, but equity, no. If that makes sense. And I think like what I'm going to do here is I usually like to give it a few days. People say the 3-day rule. Sometimes it's 3 days, sometimes it's not. But what you have to do, especially if you're thinking about options or things like that, you have to give this stock a moment to breathe, right? So how many times have we said so far, stocks are either running or they're resting, right? So we had a big run, and then we had a decent rest. This is your rest, right? Now we're running again. We're running down. It's going to rest. And then once it rests, it should rest around here. I think this is going to rest. And then once it rests, it's going to start to tell you what direction it's going to go in next. And at that point, as long as we're over this, right? I still think that we go higher, right? It's not unless we're doing something like this. So this is ugly, right? So like if we have a fail, something like this, and then we get below that downtrend, and we actually like, this is what that would look like. It would look like quickly, and it would probably be looking like a retest of yesterday's lows or today's lows, something like that. That would not be a good look, because that would be, we're right back into that downtrend. And at that point, Kevin might not be right. I don't see why. Look, if Tesla does fail here in spectacular fashion, like why would 190 hold again?
Right.
I don't think it would. Right. I don't think.
Would you go short at this level on Tesla, or it's not justified enough yet?
I'm more in the camp on Tesla that I'd rather look for something to go long to into that October robotaxi event.
Right.
If that makes sense. And that's gonna, 1010, next earnings is 1016. So I'm probably looking like, at this point, I'm looking like June of next year, or maybe January. Tesla options are pretty expensive though, so I might just really wait till the very last minute to do it. And
okay. Last question on Tesla: is there an argument that it ran up so much so quick? $100 in less than a month, that it just needed any reason to sell off, and the earnings being was the reason, and that's what we're experiencing?
Not so much. I think it's like the same with the rest of the market. It's like we have. You have these expectations, right? And market likes to overshoot to the upside and to the downside in spectacular fashion, right? So I think this is a situation we could overshoot to the downside, but I don't want to see that 205, whatever this is, 205, 206. I don't want to see that level get lost. If it loses it, like even then, I'm not gonna sell my position, right? But it'd have to look something like this. Exactly like that, where I would take a short position for a good time, but not a long time. And still in the back of my head, I'd be thinking, longer dated, long options. But this is not the time for that for me.
Okay. So that's
hopefully
what we got
that helps,
on Tesla.
I know it's like, but this is that, I would say connect these tops on your charts, whatever it is. This is that prevailing downtrend Tesla needs to get back over. And if she can, it's all good. Like it looks good, right? So hopefully this is like a little liquidity grab, but I don't need to go running out the door to try and grab it just yet.
Okay, let's do Nvidia. So we got a downtrend to 106 and then a bounce back to 114.
Nvidia not along anymore, right? So we had the longs here. I was looking at least 139 possible extensions. We undercut it and it instantly failed. So like this is it. That was it. That's it. I think, for Nvidia, it's the same thing. You're getting close to earnings, and I think people are scared, right? Like they're
which happens every time going into the earnings.
Exactly. So quite frankly, I had a level, and I posted this a bunch of times too on X. It was one. So on Nvidia, and we'll just do this for you. I'm going to tell you, there's this little secret kind of level. It's $123 even, right? I'll just make this really big and bold so you can see it. But it's $123.00. Not joking. So I'll just 1, 2, 3. That's as easy as this is going to be for you. So at 123, Nvidia's back in an uptrend. This is like, it's like this really weird that we call like order block. But again, how many times have we done this? Like you had a bunch of sellers here, right? And you could just see like when we did this to the penny, like how many times, and then all of this, it was huge. So, and then also over here, right? And all of this straight line across, it's a big deal. So when we got back to 123, it's not 125. It's not whatever. It's I don't. It's one of those weird ones. 1, 2, 3. It was just a close below is no good. This day I actually did short it. And so my target though, here was my target. It was 110, and we have what we call session gaps. And so there was an unfilled session gap at 110 and change. That's from June 3rd, right here.
Yeah.
So to me, that was my target. Remember, a trader, I'm just going one level to the next level. How this works, like you can see this pretty clean here. This is another session gap, but straight away, like it looked like it was gap and go, we call this, but it was filled. It doesn't have to fill. Things like that don't have to fill. And when I look at gaps, by the way, for me, it's critical. I have my after hours and pre-market hours turned on. I do not care if there's a daily gap. Like this is gappy stock when you look at it without after hours turned on. So I do not use that. I just do not. Like I'm looking for a moment in time when there is a legitimate zero trade section in the stock from the post-market to pre-market trading. Remember, if it traded there, to me, it counts. So
but you don't think Nvidia as well is on some massive collapsing trend here?
I think it's just fear, right? I think that I think that people got scared right after Google. You know what's going to be funny? This can change completely because we do have we're going to have Microsoft and we're going to have Amazon before Nvidia reports. These guys are the last ones to report this quarter, so you're going to get this read through for Nvidia across the board. Right now, the read through is not good because of Google. Although their cloud was up, it's a very teeny tiny spend that Google has for GCP. It's not anything close to the rest. So that said, I think, you know, a couple of guys had this like kind of 107 right here level. So if we go shelf to shelf, for sure, what we have to see, like what you want to see Google doing like this, I think is a dip buy type opportunity. And if from today's low, here's today's low, 106.30, I think you can use that if you're trading as a hard stop. So you have a pretty clean risk reward. If the market starts going upside tomorrow after PCE, then I think you have a very clean, like hot, like low risk, high reward type of opportunity to take this trade to the upside, quite frankly, meaning like, you know, as a trader, do your guys know like risk rewards type stuff? Analysis. So like if I'm risking 1 to make 10, right? So this is risking 1 to make 5 on a risk reward ratio. Like your upside would be right back into that 135s at least kind of level. But from an investing perspective, 106 could be a stop. And then the next one would be this 95. I think that's, hopefully that's pretty clear, but like that's this level if we get there. And I think that would definitely be a liquidity grab. But, you know, NVIDIA is in a cyclical it's a cyclical business. And I think what happens when we get to this point is that a lot of the analysts and a lot of the, maybe even some investors, semis are very cyclical.
Yeah, but the thing about the cyclicality, Google, they just said they're spending $13 billion. The cycle is in the favor of the semis right now. And what I'm confused is why the semis are selling off when CapEx is going up.
Right. So when we remember we were talking about Apple and be like, oh, I think it's a long because like, you know, the comps are going to be really easy from here. The comps for NVIDIA for the next year or so are going to be pretty difficult.
Yeah.
I think. So the second you don't have like a great like beat, you know, you don't get that like that huge. You're not going to get that type of reaction. Like this is a stock. Honestly, I took like a long on Amphenol. I don't know if you know, it's a like a crazy performing stock. These are like the literal, when I said literal picks and shovels. So it's a small, like barely miss. But this is like very much connected into that data center stuff. But I think if it's going to be a lot of read through. So let's say if Microsoft or Amazon or Meta, like we know that they're going to be overspending. I think that's what Google said. There's risk of not spending as much.
Yes.
So the question is like, look, they've already priced all that in. So unless Google comes out and said, we're going to double again, you know, they're very conservative. Google's pretty conservative. So they're not going to say something like that. Mark might, like Zuck might come out and say something like, oh, we're going to have to double again. But at this point in the market, like with these conditions, maybe they won't, right? Because their stocks might get hit if they said something too.
Okay, we got to do IWM, the Tom Lee special. First of all, before you get into the TA, do you agree with Tom Lee on this thesis?
I do, man. I do. I really do. So like I thought I was thoroughly of the mindset that there was not going to be a pullback to be had on IWM. I thought it was just like, we're going. So I was wrong, right? I was definitely wrong on that. We did get a pullback and it was a proper one. To me, a decent one. We had like 215. And because I was wrong, I'll tell you, do you mind if I tell them what I'm in?
Sure, go ahead.
I don't know. So I'm in June 2025, $285 calls strikes. That's a strike. Like I first bought them at $1.30, which was like actually way up here at like 212. And that was after the CPI. So I didn't get it ahead of the CPI. This is that clean break right here, 212, right? So here's the thing, if we get a retest around there, okay, I'm buying again. But if we go any lower than that, I'm dead wrong, and I need to exit stage left. If that makes sense. So that's where I'm in trouble. I will say that there's nothing about like the day-to-day price action that tells me I'm wrong right now. So what I mean by that is it might not be the rocket ship to the moon like we will hope and dream of, but what's absolute is that IWM is by far outperforming everything else, if that makes sense. And the way that we broke it down last time is like you look at KRE and you look at XPI, those two components, if those are starting to continue higher, then we're good, right? And I think that we are starting to see that, like we're at least seeing part of that. And again, normally yesterday, SPY Qs were down 3%, IWM was down 2%. We would have normally seen IWM down like 5%. Yeah, IWM has 5% days, guys. Like that actually happens. So up and down. So we could have seen something really bad. Had that not been the case. I think that there's another component too, where it's not necessarily just small cap, right? I think it's like rotation to value as well. So there are some things like in that, what we do is you can look at something called RSP. Are you familiar with this?
I'm not actually.
You're not. So
RSP equal weight. Oh no, I know this. Gotcha.
Yeah, so it's equal weight SPY. It's still decent. It's not anything like actual SPY. This is just market cap weighted.
Right.
Oh, nice red arrow there.
The spread between equal weight and market cap gives you an indication of what's going on as well.
Yeah. So, but we're back to IWM, just so we're clear, right? I think that it's possible that we could get back into this kind of area, but 215 was like that first, like right here. I actually bought this day and this day again into my position. So I bought those June 2025 calls here at 135 or 130 here. I added them at, I'd have to pull up my thing. It's at like 190 or something, just a little bit. And I brought my cost, this is like averaged up to 160. And then I averaged up again and brought my cost up to like 190s. So that's
Jason, you have to believe to some extent the S&P, Nvidia, Amazon, they consolidate for the money to even be available.
Yeah. So I don't want to see, and this is where I'm like, I don't want to see SPY die. Like I do not want to see that for my IWM trade. I want to see SPY specifically. Qs can do what they want, but I want to see SPY specifically hold in this range. And if they don't, then I'm not opposed to putting on some near-term hedges on IWM. But to me, for that strike, I don't have any intention of selling it less than $1,000. I mean, that's just me, right? Doing me. But what's true is like, we're back into this area. That's pretty important, right? And so this area here for IWM is 2021, all of 2021. We had this huge chop zone. And so if you're not looking at this consolidation area, I think you're doing it a little bit of a disservice. So this level, that center point, we call point of control for that full year of consolidation is 222.39. And there was a little spot right here that was like a small liquidity area. And if I brought this over, we basically got right into it. So right here, this area between 222 and 228, I think if we're below this, like 228 is probably like near-term upside. But it's not like full breakout. Like I'm not like, oh my God. I think it's going to be something where it's like, it's going to be one of those crazy IWM days. It's almost like, how do I say it? Like if you hold a beach ball underwater and then you let go and it's like, poof, it goes and it goes up and then it kind of starts to bounce down. Like it might be like that. But for right now, we are firmly back into this, what I would call like a chop zone, and you're really like point of control from that area. And we can see it also on that volume profile. It's right in here, that 220 level, like this little blip.
Last question on IWM. What would you have to see technically for you to be like, this is the wrong trade, Tom Lee's dead wrong on this?
211, right? Like if we lose this level right here, 211.70s, like this area, if we can't hold this, he's wrong and I'm wrong, and I probably lose a bunch of money.
But in what time frame do we need to lose 211? Just in general, if we close above 211 for a couple of days?
No, during this next seasonal downtrend, right? So like so September is universally not good, except for, small caps have this they have this thing called the January effect. Are you familiar with that?
No.
So there's a term called the January effect, and that's specific to the seasonality of IWM. And what it is, it's actually towards the back half of the year. January ends up being like the strongest month for small caps, but that builds into it. Look at these guys are. It builds into that, right? So that's more like August, October's for IWM. So what I'm thinking right now is if we can't get through at least up here in the near term, let's say, I think we get up to here and I think we can pull back. And then if we don't hold this 220 after a break higher, then I got an exit stage left for sure. But for me, this is actually, it's just pretty healthy, right? Even if we breach these lows a little bit, it's the answer to the question is 211, right? If we cannot hold 211 through this next PCE and really through July FOMC, then, it's all gone, right? I think that if the market starts pricing in some really weird stuff for this next FOMC meeting, I think that's the next choppy period for IWM. So we might press higher on some expectations, but whatever the commentary is from Jay Powell in the July FOMC meeting, I think that's what's either going to make or break the IWM trade for the back half.
Okay, can we do Amazon?
Oh man, Bezos just like crushed this thing.
Absolutely crushed it. He ruined it.
Yeah, he ends up being this brick wall, and I think investors are like they understand it. I have this really weird thing with Amazon that whenever Amazon is less than Google, like I buy Amazon, like you should buy Amazon. It's just really weird. Anyways, but we're on it, right? So we're on that kind of level. I think, this is going to come into earnings. Let me just do this. So remember, I don't do technicals for earnings. I think it's kind of like a waste of time. But we do this. Like averages. So I'm just going to do this as fast as I can. 2.3, 7.9. So I'm going to get the average move for unless you guys know it.
I think it's like 7 or 8%. I might be wrong. I'm pretty sure it's around there.
Yeah. So 6.5% over the last year and a half. So wherever it is, 6.5%. Oh man, this puts it up to that barely puts it up to 190. Downside, if we get a move, that 6.5% is going to put you into that 175, 170s. So here's that thing again, where you're looking at like highs, lows, and all that kind of stuff. You have a trend line that is broken. So this uptrend, you have broken that. But at the same time, it's like, if this is your last low, this is the low before that. Where's the spot that the lowest higher low can show up? It's literally where we are. So if this is the last low, the absolute lowest spot that a higher low can show up is 175.
Okay.
It's 175. If it's below 175, you got it. Well, and that's going to put us right in that spot. So it's 173 would be a stop, and that's pretty tight.
It's annoying too, because like the guy
Oh
who
my God,
founded
so
the
annoying.
company is telling you he's selling, but all the banks are upgrading it to 230.
I know, right? Like, but that's how they do it, right? They when they upgrade, it's like, oh, okay, now I'm in trouble. It's when they downgrade that you can get greedy. But so net, I think this is your prevailing uptrend. You're still in this channel, right? But so whenever we've had this little breach, the last time we had a little breach of this prevailing uptrend, it ended up being a good buying opportunity right here. But you got that confirmation when it was over 130. So that's kind of where we are right now. I think you'll get that, on a little. It's probably going to be around that 180 level, 181. So we might have another kind of like red day, possibly. And then if you get a green day after that, that looks like this, to me, it'd probably be a go.
Okay, can we do AMD? Because I just looked at it. It is below 140, Jason.
Dude, AMD looks. I looked at that chart today, and I was like,
I could not believe it.
One
Below
going
140.
30. I was like, what's a story stock too, right? Let's be fair. So AMD is a story stock in terms of the AI stuff. I think they have a play, but the play is endpoints, so meaning like laptops, desktops, kind of stuff. And I believe they just put something off on that. So here's that, or postponed. So here's that 164 level, that prior all-time high from 2021. I think this is important to note. And again, I'm looking at a weekly scale here. So from this perspective, from that high to this low, that we just got to 185. That was about 50% of that fail, and the bears took over right here. Dude, this is not.
And I don't think their earnings are going to be that good, quite frankly.
Well, that's the thing, right? I think that people are. I think they're there, right? Like it's not. Yeah. It's not. They're not going to be that good. Because like the products aren't out yet, right? Like they're not out in the wild yet. So they can't have great earnings. That's why I said story stock. So I'm going to take what we call this swing low to swing high. So this is the absolute last low. This is like $50, right? To this high, we're sitting right in this area. This is pretty wide of a gap. I mean, so this is like your volume shelf right in here. And then I said 130 is like, it just seems so far, man, and this is what I'm saying. Like, I hate to say things like this. Like if something looks really bad, like it just feels so crazy. But so let's just go level. Here's what's true, right? So even from this most recent one, 90 to 200 or whatever, let's call it from there. This move, we are at your absolute deepest kind of retracement, and this is 130. You're more or less there. This low is breached. That's the problem with this chart, right? So you have to reclaim 141. It has to, and you can't go lower than these guys right here. So that's this little area. So you're basically in there. If you're a bull on AMD, you probably need to be buying here, but you can't really see below that 133 on a closing basis. I mean, you can do what you want, right? Like,
okay, let's move on.
At that point, you're looking at 120.
Okay, real quick, this question. Thank you, Savage, for the super chat. What's the setting for your VRP?
People ask this all the time. So that's visible range volume profile, VRVP. That's this thing on the side. So I use TradingView as the platform that I'm using. The default row, you guys can tell me, I think it's like 75 or something like that. But row size, I just crank this up as high as I can, which is 500. And then the volume area I have is 10. But that gives me some ultra granularity, and then I flip it from left to the right of the screen because I don't like it over here. But that gives me basically like high definition granularity on where these volume shelves are.
Got it. Okay, CrowdStrike.
Dude, so I mean,
let's see this one.
I was hoping 300. It didn't hold.
It was bad. But
$10,
hey, $10 gift cards have not helped.
Everybody found out how important of a company Crowd is now, right?
Yeah.
And I was even shocked. but you know, it is what it is. So we are basically sitting on it, man. So we're in here. I think that 240. Here's the thing. There's a valuation thing possibly.
Are you in this at all in any way or no?
I did. I bought some equity, like
When? Like
higher.
A little bit
No,
higher. Okay.
like 300. Because here's the thing. I have not owned this, and it wasn't a lot. I have not owned this on any of this run because to me, I've coming from the enterprise, and I used to sell this stuff, right? Like I sold CrowdStrike, I sold Palo Alto, I sold Zscaler. Crowd was like, okay, to me, we call it endpoint protection. That's like on your laptop, on your desktop, on your server. But the big thing was Palo Alto, and that's like protecting your network. They're two totally different products, by the way. People that own CrowdStrike own Palo Alto networks. It's not like one kicks the other out. That's not how this works. Just so people know. You know,
but you never got in because of valuation, I imagine. That's why you jumped in on the dip.
I never got in because when I think of endpoint protection, I think of like Norton antivirus, dude. Like, why am I buying antivirus at like this valuation? And I never saw the platform play. But to be fair, like I wasn't selling it when it was like this giant platform, if that makes sense.
Right.
And to me, it was all like Palo Alto. And I still think Palo Alto would be a beneficiary of this situation, as an aside, as opposed to like a Sentinel one, because like I said, people that own CrowdStrike, 90% of those people will probably also own Palo Alto, or at least some version of. And for Palo Alto to come in, all they have to do is say, hey, Amit, do you want me to turn on your Global Protect licensing? And you just say, yeah, go ahead and add it to my bill. There's no sales cycle. There's no nothing, right? It's just that, boom, done. So it's that easy for Palo Alto to come in and pull up some of the stuff. Global Protect is their endpoint stuff. Anyways, so this is where we are on Crowd. I think, you know, it's got to be this 250s, right? So 250, we're coming in. I think this can kind of go away. It's got to be right in here, right? So we're repricing. I think it's just that I think realistically, you just need to give it a while, right? And not really, because this could keep falling and falling. For all I know, it could be 160 because of the litigation risks, if that makes sense. So like Delta's probably going to sue the crap out of them. Somebody else is probably going to sue them. Who knows, right? But for all I know, they could come out and say, oh, it was Microsoft's fault, not ours. So there's all that kind of like risky. It's just, there's a lot of risk associated to it. So it's just, this is one where it's like, as an investor, I'm like, look, I think it's worth a nibble. To me, super speculative because I've never owned it, and I kind of felt like I missed the boat on it.
Right.
But I gotta be prepared to buy it at 150.
I agree.
Yeah, if that makes sense, because this is, you know, it'd be like $50 increments.
There's just no way to estimate how much the losses are.
Yeah,
and
it's really hard. Yeah.
And if they decrease their growth, the reason they get a premium valuation is because they're growing free cash flow and top line at both at about 30%. Right. If these rebates cause them to go to 25, 24%, then the valuation just takes a hit. Yeah.
And it's not like it's cheap stock, right? Like it's kind of like Cloudflare. Like I don't own Cloudflare. I won't own Cloudflare. It's just, you know, again, it's not my thing, right?
So to this question from Savage, thank you for the super chat. Leap spreads on CrowdStrike 2026. I would be against it until we get more.
Yeah, I think you're.
Until Q2,
I would be against selling puts definitively. I think the worst thing you could possibly do is sell puts on CrowdStrike, because something could happen and this drops another $100. You're going to be in the hole so bad on something like CrowdStrike.
Agreed.
It's rough. So I would stick with the equity, man. Because guess what? By the time when this actually turns around, right? Like you're going to have to start looking at this net new. Whatever happens from here, when this starts, so this is when I say net new, if I delete everything in its past history, right? The first thing I have to see to think that this is going to go higher, I need to see a new daily high. But dude, where's the new daily high since the like fiasco?
Since Y2K,
It doesn't exist. It's just a lower high after lower high after lower. I have to see a new daily high. And the second I see a new daily high, then and only then do I really start looking for a higher low to enter.
Okay.
but I don't have it, right? We had a higher low once, I think. Yeah, we did have a higher low, but that's the danger of like grabbing a possible or like what you think looks like a liquidity grab this day, because it looks bouncy, but it was just to lock in another lower high and fade away. So I have to see a higher high first on a daily perspective from a daily interval. Like my chart has to be on the daily, each candle, a new daily high. And then I'll look, like really look. But until I have that, I just, I can't. I mean, at least 250.
Okay, so I know we definitely got to get out of here by 5:30, so we'll do like 3 more. Can we do SOFI?
It's Technical Thursday now, Savage.
Yeah, so now it's Technical Thursday.
Today.
Next week also, guys, we won't do Tuesdays because we have Amazon that day.
Huge, so. Like biggest earnings week.
Yeah.
We have like 500 companies reporting next week.
It's a lot.
Are you ready, dude? It's so big.
I mean, given the downside we got this week, now it just makes next week even more.
Okay, so what was the next one?
SOFI.
So, who?
SOFI.
Oh, okay. I'm not gonna lie, dude. I kind of might have bought that crazy leap, because this is wild. I think it looks good, but I think it's gonna come into 2 things. So we have earnings again. We got earnings coming up on the 30th, and we have PCE. So this whole IWM thing is either gonna catch fire tomorrow or stall out. To me.
Yeah.
Right? I think the Qs are the biggest risk. Your mega caps are the biggest risk tomorrow of possibly being rugged, or either it's a full-blown melt up or the Qs get rugged and IWM has a rough day, if that makes sense. But so this is that same like daily. So on a stock this inexpensive, I really defer just to use a daily candlestick. I wouldn't really look much less. Like you can even look at weekly scale. The weekly scale still looks good. So does the daily scale. This is that same thing. So you have that little breakout out of the downtrend. And so here's your kind of pullback. So even from here to here, this looks good, man. This looks good. Like a nice bounce, pull back right into your kind of like golden zone. It could go to the gold. It could go down to as low as like 680, which would not feel good, but it would still be good technically.
Yeah.
And that's just going to retest this whole thing. So I think like the next, as long as you're locking. So remember, we have a higher high. So this is the last high. Definitively, this is a higher high. So now you look for that higher low to really start getting into it. And so where is that higher low going to show up? Right in here, somewhere around here. And it could be as low as 660. But I think if that goes, this is just, unfortunately, this is going to come down to earnings, man.
Yeah,
so
if they have a crappy earnings, then we're done.
Yeah, yeah. They have crappy earnings, we're screwed. I'm not here for I think it's that whole, like, they put off, what was it? The judge said no more.
Student loan stuff?
No more putting off student loan debts. When we first met, I was like, yeah, to me, it was always like you on SOFI for the student loan book. And I think this is, again, it's the rate story and it's that whole situation. But this chart is tough, but I will say near term, this is what it is. Downtrend is broken. We're up. Now you're looking for that higher low. So I still think if you wanted to do something like those September short puts, like those $6, $7 puts, actually, what's a $7 put going for here?
The premiums are decent. They're not bad right now.
Yeah. So the way I look at this when I'm selling puts as an investment, number one, I only want to do it when I'm actually willing to buy the stock at the same time, right? If I'm already getting long the stock, I think that's fine to go ahead and sell some puts to possibly get longer if you have that opportunity. But when you do it, you want to look at like, okay, if I sold a $7 put for September 2024, I would collect at least $55. So at how much is SOFI right now? So I have to look at this. It's $6.98. If I sell a $7 put, I agree to buy the stock at $7. I collect $55 to do that. That means my net cost on the underlying is going to be $6.45. That becomes my stop. So The loss when you sell puts, side note, is unlimited, right? That's why it is unlimited losses. It's to zero. So to be clear, you have to look at what's the premium I collect in at the minus the strike price. That's my cost basis. Anything below that 645, I'm not going to be really profitable on this trade. So, and where's 645, by the way? That's way down here. So I have to look at, do I think SoFi is ever going to get to 645? If I don't think it's ever going to get to 645, selling that $7 put for 55 cents is a pretty good deal, right? So that's how I have to look at this kind of stuff.
Right. Okay. Can we do Palantir?
Oh, dude, it was looking so good. It was looking so good. You got that free earnings pop. We got back to that 29.29 level. Right.
We had 29.83 at one point, dude. It was.
You did. I was like, oh, I was cheering for it, dude. I was going. And then the other thing was what if it doesn't go? Then we were thinking, okay, where could it pull back to? And it was kind of like in this area. Look where we stopped.
Which we did today, 25.64.
Yeah, that's a perfect stop. I don't think it's like go long yet, because here's what's important to know when you measure, like when you're looking for these pullbacks, there's a difference between the stock ready to go up and a stock done going down, right? Very different. I think this is too close to earnings at this point to be a big Momo thing. I mean, unless I'm wrong, right? Then I'll be wrong like over 27.50 probably. Yeah, this is what you're looking for as an investor here is you're looking for a higher low somewhere from here as low as 23.75. That would suck, but the trade still would be valid at 23.50 from a trading perspective.
Right. Okay.
Yeah. And I think this is again, big earnings mover. So at this point, I think you probably chop around a bit. But if it looks like it's going to be a breakout on this one, that's actually probably the opportunity I would take to maybe sell some like $36 calls, something like that. Or like it looks like it's going to be a big fail, then I'd probably sell some like $20 puts or something. Because I don't think it actually makes a big move until the earnings event actually happens, if that makes sense.
Yeah. So
like revert to the mean.
Okay, SMCI. This one has collapsed from almost 1,000 to 680.
I mean,
is it a dip or is it just a hardware company with bad margins?
I mean, if it's a dip, this is as low as that dip can go, baby. That's it. Right? There's no more room for error on this one. So you're here, 670. And that's kind of back into this like chop zone. So that post earnings move, I'm going to take this as an important day because that's like a fundamental event, right? 495. Let me see if I can zoom in a little bit more. Yeah. So this is that first, like not first, but like, it's like, oh shit moment for earnings. Gap up, pull back, retest. Yeah. So this ends up being a really big level. This is pretty low, man. So I think this becomes your next level of interest, let's say, somewhere in this around that 500 mark. Actual point of control 480. So that is interesting. I mean, from this last breakout, what is that going to do? I mean, that. Do you own SMCI?
No, I don't, but I know people on Twitter love this thing, and I don't know. I was just thinking, is there anything?
I mean, like, I would. Why would you really rather SMCI over Dell here?
No. Okay, can we look at Dell as a comparable? Because I think Dell is probably the better one.
It's been ugly, but I love it.
Yeah, you're
ugly, but I love it. I would buy it. So we're right back in here. So this is the breakout earnings trade, right? 95 looks gross. I don't want to say that's 95, but we're in the same kind of boat with Dell. Is like, if I didn't own enough, I'm getting ready. But I might have to save some. You have the real breakouts like down here. Dell, at least to me, has like a pretty heavy moat. Best to read, blah, blah, blah. But this level was where, from a trading perspective, you really needed to hold here. 129, and it didn't, right? So it bounced up, it rejected, and that's like, okay, from a trading perspective, it's no good. And so at this point, it's this box in here. Would you guys really actually start to like Dell more than SMCI.
I mean, I would have to study both of the businesses better, but both of them,
Dell's a huge business. It's well, anyways.
both of them look ugly based on the semis.
Oh, dude, I'm not gonna
general.
lie. This doesn't look ugly. I mean, this doesn't look pretty. This would be that like 108. These are kind of moments where like you're gonna need to see some kind of catalyst happen. I know Michael was selling some shares.
He sold 800 million worth of shares. So
Yeah, he did do that. So it's like, are we in another Bezos moment? I don't know. But I like the stock, dude. I was like, anyways. But yeah, it's possible that it goes down here. I don't think she sees it, but you could be wrong.
Okay, can we look at one last thing and then I'll get you out of here? And by the way, guys, his Twitter, Jason's Twitter, I'm putting in the chat right now. Yeah, please make sure to follow him on Twitter. All of his information is there. You can get access to his Discord, all that stuff.
I like Dell at 55. I mean, I would love Dell at 55.
Yeah, Dell at 55 wouldn't be too bad. Can we do Bitcoin real quick, given the conference is on this week?
Sure. So Bitcoin conferences, usually they're out there. The boys are out there right now. You got friends over there?
Saylor's speaking right now.
Yeah. What time's Trump?
Saturday.
Okay. So Bitcoin conference is usually a sell the news event, but if they say something wild, which she might, I think Kamala is going to be there too.
No, she rejected it. She's not going there.
Did she?
Yep, she rejected it. I think it's a big mistake, but she rejected it.
I know, right? So this is a tough one, right? And I say tough. So in our group, the guys are asking me like, hey, where would Bitcoin go? We did buy this dip, right? I posted it too on X for Ethereum. Again, I'm more so on the Ethereum side than the Bitcoin side. But this is the dip to buy for sure to me on that liquidity grab. The question I got was like, where do you go from here? It was just under the all-time high, somewhere in this area. And I think there was a liquidity. We had this. It was like right there, 67.5. And I think it actually got a little bit higher. Yeah, but ends up failing. So this is how they do it, right? Like they make you think it's going to break out, and just before it actually does, it pulls back. This is a decent pullback. This green box here, this is like that general supply zone for me from way back here. So holding this area is pretty good. I think you have to come at it from this perspective. Your first pivot is going to be 64K. If you lose 64K, I think you have to be realistic, and you have to look at this. Any good bull is going to think, what's the bear going to do? So a bear is going to say, this is a double top, just to be objective, right? A bear is going to say, this is a double top, this is that last low, and this is a lower low, and this is now a lower high. So a bear is going to get all up in your face right now and try to push this to net new lows like 50s. That's what a bear is going to do. You got to be aware. I think a bull has to, like, you want to see this 64K level. You really want to see that hold. But if this is the lowest low, where's that spot? Like, where would you like to see, like have to hold? It's 59.6. Like, it could legit, we could see 60K again. But I don't think this is a situation where you sell this at all. Even if you got to 60K, I don't think you sell this. Like, what are you going to sell for 5% dip? Like, no. Like, you should be in accumulation mode to me on Bitcoin. But right. I wouldn't get all bulled up on a breakout. And it's definitively not. So here's how it goes. If we are, and this is that smaller. So I'm dropping into a smaller time frame. You are in here. And it all works the same. So you're here. You've defended this kind of liquidity, that lower 64. This ends up. So to me right now, this looks like we're going to 66.5 and change. But you need to be aware, where is the bear going to step in again? Just under 63, 60, like up in here, right? And specifically, so explicit, like 66.5.
Right.
To the penny would be, again, for a bear, where's the highest that this could go to still be a lower high? 66.518. For like a intermediate term, you can look at this, be like, oh, we're going here. Look, it's not, and this is great, but now you have this level that you're dealing with right now. And then you're going to have this level. You have a lot of challenging spots right in its way. But where's that level? It's here. So for me, if I think this is possibly validated for a break over 66.8. So it gets this close, right? Like in here, if you're over this, I think that this cracks. And I think that cracks. Does that make sense? Cracks meaning like goes higher, goes through. So like if it's over 66.5, like in this area, 66.6, call it 667 just for round numbers. Like you're definitely going up another 1,000 and likely 1,500, and then you just kind of like trail it up from there and just want to see higher lows and higher highs.
Okay. Let's
but
see
yeah,
how it ends up playing out.
It's hot weather. It's not the time for Bitcoin. Just know, like, this is kind of sketchy. Like, you know, this pattern, people, you be like this. That's a stock pattern. You know, it's Bitcoin, so we don't get stock patterns in Bitcoin. We get like, you know, what's the varsity
zigzag craziness.
Yeah, you get this. You get this where it looks like this, and then you're like, whoop, and then it do the same thing.
Got it.
Like that. That's how crypto works. Not like stocks. But anyways, it is what it is.
All right. That's it for us, guys. Jason's Twitter is in the chat. Me and Jason are going to be on a Twitter Spaces actually in like 30 minutes at 6 p.m. So if you're on Twitter, you'll find him there on that Twitter Spaces. Deckers is up right now, 925. DXCM is down 35%. Quick DD on that. They're a glucose monitoring.
Insulin, yeah.
Yeah.
They're the guys that do the sticker and they have the app. Auto glucose.
I believe so. It seems like Ozempic is killing their business because
I mean, that's
not that many people have diabetes anymore. So
hey, this is not a good sign for McDonald's.
Oh, it's a horrible sign for McDonald's.
That's all I know. It's unfortunate.
Yeah.
But
so we'll talk about those tomorrow as well and go through that.
All
right. Thank you, Jason. Appreciate it. Yeah,
Cool.
hopefully you guys got some value. We'll see you next time, Jason.
Adios.
Bye. All right, guys, I'm out as well. I'll be live at 6 p.m. on Twitter Spaces with a bunch of other people. We'll be talking tech, all that good stuff, and we'll keep going from there. June says, I am wrong on DXCM. Does anyone have DXCM? I know some people in the chat have this. This one was nasty, dude. I did not know. The reason I'm saying Ozempic killed them is that's not my due diligence. On Twitter, I posted this chart. Wow, it's down almost 40%. And every comment I have on Twitter is saying Ozempic killed their business. Ozempic, I'm like, okay, so seems like the prevailing narrative is Ozempic is stopping the sale of insulin monitoring given diabetes potentially are decreasing. I mean, we'll have to go deeper on this one, but down 40% right now. Pretty aggressive on this one. This was a 50. No, this was a dude. If it's down 40%, this was like a 60, $70 billion company. Now it's 42 billion. So it just lost a decent amount of its market cap. And then Deckers, a little bit easier of a company to understand. Shoe brand. This one is up 9% after ours. I'll go through Deckers tonight. We'll talk about that tomorrow morning and go a little bit more deeper into their earnings as well. Okay, there you go. Where are you and Jason going to be again at 6? It'll be on Twitter. Just follow me on Twitter and you'll see it live on Twitter Spaces. So I'll put my Twitter in the chat. That's where we will be live. It'll be with a couple other accounts and we will talk tech and just a bunch of other different things. June says there are only 2 companies that make monitors and they are still used in diabetic remission. Well, in general, that may be the case, but it seems like this 40% decline, I haven't gone through the results, but it has to be something around their earnings and demand for their product, which maybe is because of Ozempic. Maybe it's not. I don't know. But definitely it looks like they are taking a pretty nasty hit. I'm going to try to get their numbers. I don't have their numbers in front of me, but tomorrow morning we'll look at their numbers. So I think the big thing now, the analysis we did with Jason on IWM, I think makes a lot of sense. If it breaks 210, we don't have kind of this small cap summer in commencement from a technical perspective. I think tomorrow is going to be very important. Today we had the bounce. Wasn't the most formidable bounce, but it was a bounce. Now we're going to need to see tomorrow after we get PCE data. We got GDP data today that was really good. PCE data tomorrow, is that also really good? That allows the bounce to continue or maybe stops the bleeding in its entirety. I don't know. We're going to see. But that data tomorrow at 8:30 is going to be very important as well to kind of see how this ends up playing out. All right, cool. That's it for me. Crazy day today in the markets. We had a little bit more of a break from the pain, even though in the morning it was painful. And now let's just see tomorrow. Oh, wow. Tom, let me show you guys this real quick before we leave. Tom Lee just quote tweeted, "Meet Kevin." And either Meet Kevin's going to look like a genius or he's going to look like a jerk on this one. This is what you got on Tom Lee. He just says, "Meet the new Keith McGullough. Angry markets defy his wishes." Who is Keith McGullough? Who's this guy? Keith McGullough. I'm probably saying that wrong. You guys are making fun of me. Keith McGullough. He is CEO at Hedge Eye. And he's had it for 2008. Did this guy go short or something and then the market flipped on him? Is that who Keith McGullough is? I have no idea who that guy is. But obviously you can see Tom Lee kind of going at it with Meet Kevin. It's actually kind of funny. Like he's going at it. So either one of them is going to be right. And I guess we'll see what happens. Yes, this is a Palantir sweatshirt. I got this today from Iliano, who sent the box with a bunch of different merch. So I'll be wearing it a ton. The merch store will be launching with a ton of more stuff. We got the signed carp hat, which is awesome. And we gave away one of this in the beginning of the show. So if you were there in the beginning of the show, first 15 minutes, you saw the giveaway as well. All right. Thank you, everybody. We'll be back tomorrow, 8:45 a.m. We'll have TJ on. We'll discuss all the moves we're making in the public portfolio. And then we'll keep going from there. I love the cream color as well. Yeah, cream is such a good color. So I love it as well. It's awesome. All right. Thank you, everybody. Hope you guys enjoy. We'll be live Twitter Spaces at 6 p.m. And I'll see you tomorrow morning, 8:45 a.m. Bye, everyone. Have a good one.